Good morning, everyone. I'm Charles Litchfield, Deputy Director of the Geoeconomic Centre of the Atlantic Council. We're here in Marrakesh still for the last day of our series at the IMF World Bank annual meetings here in Marrakesh, not in DC this year. And we're very happy, very honoured to receive the Turkish Finance Minister Mehmet Şimşek, who's going to talk to us a little bit about the economy of his country and then some of the things he's been talking about this week. There will be an opportunity to ask the Minister questions towards the end of this interview. They'll turn up on this iPad in front of me. So please prepare some intelligent and searching questions for the Minister. But Mr. Minister, if I could start just with your assessment of the Turkish economy. Your appointment, I think it came just before the summer, was seen from externally in a rather positive light, as well as that of Governor Erkan. But how do you assess the months that you've been back in the Finance Ministry, and what are your assessments for the future?
Thank you. Turkey is back with a new program. It has a few pillars. One of them is what we call monetary policy course correction. So to reduce unacceptably high inflation, to control and reduce it, we have a disinflation program. It is supported by monetary policy tightening, as well as selective credit tightening and quantitative tightening, because there's a lot of inertia in inflation. Inflation is very high, and would like to bring it down back to single digits over the next 3 years. It's a challenging global backdrop, but we believe it's doable. To support the monetary policy, we've also introduced significant fiscal consolidation. On the back of the earthquake early this year, fiscal policy has become very expansionary. The deficit has gone up. So back in the summer, this summer, we've introduced measures in tune of 2.5% of GDP, mostly in the form of tax hikes and some spending controls. So we're also aiming at less than 3% budget deficit to GDP, excluding earthquake spending over the next few years. Our debt to GDP ratio is low at about 33%, so we can live with one-off a shock, but we don't want to have a permanent deterioration in fiscal position. Third pillar of the program is structural reforms. Now, typically, all countries have a structural reform agenda. This time around, we wanted to make it more credible, so we have basically identified the timing, the sequencing of each reform, so investors and other stakeholders can follow the progress and judge us on judge our performance. So our program is actually quite comprehensive. It has a few goals: single-digit inflation, narrowing current account deficit, rebuilding reserves. Those are some of the key goals of the program. So far, we've made meaningful progress in rebuilding reserves, rebuilding trust. We have a strong team on the base of meritocracy and a pretty decent program already in place. So we are optimistic that Turkey will address some of its recent cyclical and structural deficiencies. And so in that sense, Turkey is back.
Well, thank you for that introduction. Before I maybe ask a few questions about the structural reforms, again, an external impression of your phasing out of some of the measures that were inflationary, but were also quite generous. And so the trend now is what we might call fiscally conservative. So my question would be how Turks are responding to this. Well, how do you feel public opinion is responding to it, and do they understand the signal that this is to fight inflation?
Well, communication is an important part of any program. We try hard to make sure that our citizens understand that this is a medium-term effort, that there are no quick fixes, that there are no shortcuts, and that it's going to be challenging, and there will be trade-offs, and therefore, of course, no citizen like tax hikes, no corporates like tax hikes, but for the country's public is as a public goods. I mean, for the sake of the future of the country, sometimes you have to take harsh measures. So I think there is a degree of understanding. We need patience. Usually, people want quick results. Global backdrop, is not that favorable. As you know, European Union is our biggest trading partner. There is mediocre growth there that reduces risk appetite and our ability to export our way out. Plus, of course, global financial conditions are very tight. Oil prices, energy prices have been, climbing up. And of course, dollar strength also goes against typical emerging markets because we tend to import raw materials in US dollars and sell goods, finished goods in euros, because European Union is our main trading partner. Despite these difficulties, we believe that bringing inflation down, which requires some, difficult adjustment, is in the interest of everyone. Because it's hard to operate in a highly inflationary environment. But if inflation also hurt the low-income people worst.
Yes.
So inflation is a big tax. And so we want to actually reduce inflation, make the country more predictable, and all of this through obviously an adjustment program, a stabilization program. Now we're giving ourselves some time to get to where we would like to be, but we front-loaded fiscal adjustment. So fiscal adjustment is largely done. Monetary policy adjustment is still continuing. Structural reforms, meaning structural adjustment, obviously is more of a medium-term effort. So we are optimistic that people will understand, but obviously, we understand that it's going to be challenging.
Understood. If I could just ask you about, I want to bounce off something you said about the currency, lira depreciation. It has depreciated more this year. You've also phasing out the KKM scheme, which was meant to protect households against that depreciation. So do you think there's a risk that households start saving in dollars again or in euros? Do you think that that risk is present, and what are you going to do about it?
Well, first of all, we allowed currency to float from June onwards after a couple of years of steady state, despite very high inflation. So understandably, that wasn't sustainable. So we allowed currency to float. It's inflationary in the short run, but I think it was important. Secondly, it's true that we would like to exit the so-called KKM deposit scheme. For those who are not familiar with it, this is a deposit scheme that was introduced at the end of 2021 that guarantees a return in line with exchange rate variation, exchange rate depreciation. That scheme is a big hindrance, a barrier to disinflation. It also adds an important element of uncertainty. So we would like to exit. To do that, we're making conventional lira deposits more attractive. So, our inflation target for 1 year ahead, or actually for end 2024, is 33%. Right now, lira conventional deposit rates are 40-45%. So we are already offering ex-ante real return, which I believe would make conventional lira deposits more attractive. So that's really the key measure against dollarization, currency substitution. Currency substitution is not going to disappear. We know that. It's just a matter of whether it goes up or down. We're hoping that through a more rule-based monetary and fiscal policy, and through credible policies, sound policies, we believe that we can persuade our citizens to stay with lira. Obviously, we have to offer them an ex-ante real return. Massive negative real interest rates of the recent times is over. So we will go back to rule-based policies in line with international norms.
Understood. So I did want to ask you a little bit about that real return. Sorry, I keep pushing off the question about structural reforms because other economic topics come up in your answers, very interesting ones too. On the negative real return, I think this has been a concern from external investors, people who know Turkey very well, and that perhaps is the real test for, let's say, in inverted commas, the credibility of this policy. Will interest rates remain negative in real terms?
On an ex-ante basis, we believe that deposit rates are already in positive territory. The monetary policy stance is tighter than what headline policy rate implies. Let me please explain this. So our policy rate currently, central bank policy rate, has gone up from 8.5% to 30% in the last 4 months. This is quite a significant course correction. But we've supported this policy rate through selective credit tightening and also quantitative tightening. So we introduced higher required reserve ratios on deposits, that's quantitative tightening. But we've also introduced caps on like consumer loan growth, commercial loan growth. Why are we doing that? Because we would like to moderate domestic demand, rebalance growth, moderate domestic demand so that we can reduce current account deficit, so that we can reduce the output cap, and that way we can disinflate. So our policy, our program is actually quite consistent and credible. We just need time to get there.
How much time?
Well, typically, you need at least a year or so to show some concrete results. Why? Because monetary policy works with lags. And fiscal impulse has been so strong that it will take some time for that to peter out. So.
Okay, let's see. Hopefully we can talk about your success at next year's annual meetings. Sadly, they'll be back in Washington and not in wonderful Marrakesh. So, on structural reforms, you've mentioned some very interesting examples in the credit sector, limiting household credit, household lending to households, limiting lending to businesses. I think, again, just for an external observer, structural reforms might mean other things, the labor market, ease of doing business, things that don't fall entirely within your remit as Minister of Finance. But I'm just wondering if that agenda that you have on credit and on interest rates might also be accompanied by structural reforms that a Western European or an American observer might understand structural reforms to be.
Definitely, absolutely. Actually, our medium-term economic program exactly has those issues covered. Our medium-term economic program has 3 major components, as I said: disinflation, fiscal consolidation, fiscal discipline, but also structural reforms. Let me highlight some of the key headings. One of them, of course, is upskilling, reskilling, meaning enhancing quality of human capital stock through quality education, but also skilling, as well as labor market flexibility. Secondly, clearly we need to improve, enhance our business, we should ease doing business in Turkey. So the business climate needs to be enhanced, needs to be improved. So we're working on that too. We're trying to boost savings through new schemes like private pension schemes, like 401k style. Deepening capital markets is one of the core reform area because we cannot rely just on commercial banks to do the heavy lifting. We also now focused on public finance reform. So while raising taxes, is easy, but I think we should make sure that spending is rational, that spending is prioritized. So those are some of and that includes tax reforms, income tax reform, corporate tax reform. So clearly, there's a lot that needs to be done. Another area that we're focusing strongly, and that includes business opportunities, is green transition. because green transition is not only essential to reach net zero by 2053, that's our target, but equally important, European Union is our core partner, and we want to avoid carbon tax, for example. And also, green transition is good for our country, it's good for our health, it's good for our planet. Digital transformation is another area. You know, investing in digital infrastructure, including like hyperscaler data centers, fiber optics. So clearly there's a lot that needs to be done to boost productivity, to enhance competitiveness. Really, the real source of prosperity lies in productivity. And without level playing field, without competition, we cannot achieve higher productivity. Of course, investments are key to productivity, but also competition, innovation, level playing field. These are critical concepts. And all of this requires continuous reform. So reform is at the heart of our program. Now, unfortunately, reforms takes time to make a difference. You know, it helps improve expectations in the short run, but usually the actual delivery impact is a medium-term issue. But still, we're very keen on that, and we certainly attach great importance on delivering on our reform agenda.
Understood. So this is a perfect segue into the next section of the interview on your goals in Marrakesh. The opportunity of these meetings is that you get to talk to the institutions, but also to all your counterparts. I mean, literally everyone is here. So before we talk about the Bretton Woods institutions and your relationship with them, I'd like to ask you a little bit about your discussions with other finance ministers and the discussions about investment flows into your country. There's been an uptick since you've been back at the finance ministry and Governor Erkan at the central bank. A big uptick from the Gulf. Any comments on discussions you've had with counterparts there? And then my analysis of the situation is that there's been an uptick from the Gulf, but not necessarily on the same scale from the EU and the US, which might be disappointing given we're in the business now of friendshoring, so-called. Turkey is a friend. So what do you think it will take for investors from the EU and from Turkey to come back?
Well, thank you. First of all, as you've highlighted, the best thing about this type of events, this is like our UN. This is like a UNGA version of ministers of finance when it comes to IMF World Bank meetings or G20 summits on a more limited scale. So it's a great opportunity to catch up with our counterparts. Usually our meetings with our European counterparts tend to focus on how we re-anchor Turkey to EU, including upgrading the customs union, of course, cooperation on security, migration, energy. So these are some of the topics. With our GCC counterparts, of course, you know, they're blessed with natural resources, but they also, GCC countries are faced with prospect of having to export capital. And of course, we would like to tap some of their excess resource, because Turkey is a very large country with significant, obviously, funding needs. Just to put things in perspective, if you take two criteria, how many countries are out there that have a population of more than 80 million people and a per capita GDP that is north of $10,000? Turkey is one of the 7 countries on earth. One of the few emerging markets of that size. Turkey's population is as bigger than 17 EU members combined, just to give you a perspective. So this is a sizable emerging market. Unfortunately, last few years have been difficult on the back of pandemic, but also on the back of some policy distortions. But Turkey is back, and we're rebuilding sound policies. So good politics, good policies, and hopefully we'll achieve better results. And so we have a story, And so I'm spending quite a bit of time actually telling that story to investors who are in town. A lot of leading investment banks are hosting us. Yesterday we had series of that type of meetings, big rooms, really full, with lots of questions, of course, understandably. So it's
What was the
good.
most recurring question?
Well, one of the most recurring questions was about longevity of these efforts. Obviously, I'm convinced that we will stay the course and will deliver. But I understand a degree of skepticism. It's welcome. We're here to address those concerns. So it's encouraging. The interest is overwhelming. The interest has not yet translated into flows to the extent that we think it will ultimately. But that's also understandable because I think, people like actions. Actions speak louder than words. They want results. They want delivery. And delivery takes time, as I explained at the beginning. So it's understandable. Bilateral arrangements from Gulf have obviously been very helpful. Usually our relations with our Western friends, including non-geographic West, meaning US, Canada, Japan, it's mostly on market terms. And we are regaining market confidence, regaining credibility, and that will translate into flows, but we need to be patient.
Understood.
During the heydays, non-residents used to hold significant chunk of our domestic debt, meaning domestic lira-based bonds and treasury bills.
Sovereign or private?
No, sovereign, mostly because we had limited private companies tapping global capital markets. So I think it will take time, but we'll be back.
Okay. Just to bring you back, if you don't mind, on the interactions with your counterparts, a few quick questions about what might have come up. You mentioned the customs union. Is that something where you are optimistic, where there have been any conversations about updating it? I mean, this has been a recurring theme that in my previous life as a political analyst on Europe, I mean, updating the customs union with Turkey is a long-standing goal, but I haven't seen much progress. So has that come up this week? And then also there's been quite a lot of controversy around this corridor stretching all the way from India, Saudi Arabia into the EU, but noticeably avoiding Turkey. Has that come up, especially since perhaps reassuringly the World Bank has promised to put more money into Turkish infrastructure? So how have you managed to balance that conversation between a big infrastructure project which seemingly has avoided Turkey, but an appetite from the World Bank?
Well, let me start with the last one, if I may.
Of course.
According to Google, don't take my word for it, a province called Çorum is the center of Earth, and it happens to be in Turkey. No, so any major routes in the old Silk Roads or new Silk Roads, ultimately I think you will go through Turkey. So I'm convinced. Of course, countries are free to have various options. The way I see things is this. By the way, if you look at World Bank logistics index, which is quite a comprehensive one, Turkey ranks ahead of 91 emerging and developing countries in terms of the state of infrastructure. So we invested very heavily in roads, airports, ports, railway. So we have a decent, really, I wouldn't say great, you would think I'm exaggerating. I think we have a pretty good infrastructure. So connectivity is important. We believe we're going to be part of those connectivity, regardless of some of the alternatives. So that's on your last point. On the first point, of course, customs union is outdated. Customs union is a product of our agreement between Turkey and former EU, which is European Economic Community. We had the first association agreement back in 1963. That's why sometimes you get Turkey getting frustrated, angry, because resentment, because we feel that our European friends are not treating us fairly because we've been left in the entree room for decades and decades and decades as Europe evolves. But anyway, customs union agreement was signed in 1995 and came into effect in 1996. The world was very different at that time. Today's enhanced free trade agreement are ahead of our customs union. So clearly it needs to be upgraded. We're not asking for any favor from our European friends. We're asking, just a mutually beneficial, a dialogue. We are the 6th largest trading partner of EU. Our trade volume is over 200 billion euros between Turkey and EU. So we're not asking for any favors.
Are there any sectors you'd like to push on particularly?
Well, we would like customs union to be expanded to include services, agriculture, and public procurement.
Difficult for services on the customs side.
Well, it's not the customs. We're talking about financial services. We're talking about medical services. We're talking about education. So it's across the board. Tourism. Turkey is quite competitive in certain areas. Like our contractors are very active. Just for your information, over the past 5 decades, Turkish contractors completed almost $500 billion worth of projects around the world. So we're only second to China in terms of number of companies in the so-called Engineers Weekly magazine's ranking of 256 companies globally. So what we want is mutually beneficial things between us and our European friends. We would like to be re-anchored to EU. Europe is a source of inspiration for us when it comes to rule of law, quality of institutions, standards of democracy, fundamental rights and freedoms. But we want Europeans also to treat Turkey with respect and as an equal partner. And I think that requires upgrading the customs union, that requires easing of visa restrictions, and that requires better cooperation across the board on combating terrorism, migration, and energy issues. Countries don't move. We are an important neighbor to Europe. Our involvement in Europe dates back to centuries. And we've been member of Council of Europe since 1949, member of NATO since 1952, an association agreement with the EU since 1963, founding member of OECD. So I think it's important that we keep a strategic perspective in our relations.
So we're coming to the end of our conversation. Just 2 more questions, if you don't mind. One from me and then one from our audience, and that will be on your relationship with the Bretton Woods institutions. The one from me is something I picked up in your answer on Turkish contractors, which, as you say, are very competitive and work outside Turkey. The question of Ukraine reconstruction. I think Turkey will play an important role there, given the size, capacity of your contractors, your location, and your relationship also with Ukraine. So if I could have a comment from you on that,
Sure.
on how you see Ukraine's reconstruction, and then I'll ask you final questions about the institutions that are our hosts here.
First of all, the destruction that Ukraine is currently facing is very unfortunate. It's a tragedy. We support Ukraine's territorial integrity. And of course, first and foremost, we would like ultimately peace to prevail before we can talk about anything business. So I think it's very critical. Look, peace, stability in our region is the most important global public good. And I think it's very important to seek, an end to this unnecessary war. But of course, when the time comes, we would like to play a constructive role, a significant role, in helping rebuild the country. I told my European counterparts that we should cooperate rather than compete. Our contractors are very dynamic, competitive. Europe has access to longer-term funding, capital markets are more developed. If we could combine our forces, certainly we could create a great synergy, which would be mutually beneficial.
Excellent. And then the final question, just on your view, if you don't mind very briefly, I should have left more time for this, of course, on the discussions that are floating around on IMF reform of the proportions on in the voting system. I'm sure you've had an opportunity to discuss it with counterparts, so if I could get your take on that, and then we'll have to wrap up.
Sure, thank you. Look, we believe in multilateral rule-based system. Sadly, the world is around us is changing, but it's changing not in a positive way. That's why I said sadly. Geostrategic competitions, protectionism, these issues, they're above our pay grade, meaning the political issues, we can't address them. Issues that we can address at this level is more mundane issues, and I think there's a lot of things that we can do. What I'm really encouraged by discussions at G20 level, and of course, at the Development Committee, the reform of MBDs, multilateral MDBs, multilateral development banks. Clearly, they need to be equipped with more resources. We're seeking better banks, but also bigger banks and smarter banks and fairer banks. I'm talking about multilateral development banks. This is important. And this is something that we believe we've made progress. The reform of IMF, quota, etc., is still an ongoing business, of course. The world is changing. Emerging markets are increasingly playing a bigger role, not in terms of population or having a bigger place, but also in size of the economy, in global trade. So I think it's important that there's a better representation, a better voice for everyone. But we should not ignore the Global South. Global South is very important. We should avoid frustration there. That's why the fairness comes in. That's why better voice comes in. So I think the discussions here, progress here is very encouraging. But the world is faced with significant challenges, including geopolitical recession, that is above and beyond ministers of finance, scope or coverage.
Understood. Thank you, Minister. Thank you also for linking the final answer to issues that we hold dear at the Atlantic Council. Obviously, the Geoeconomic Centre works very hard on all of these Bretton Woods issues, but of course, it doesn't happen in a vacuum. So thank you very much for your time.
Thank you.
This is the last day of our our annual meeting series, but there are a few more that you can tune into this afternoon. So thank you, everyone, for tuning in, and thank you, Minister, for your time.
Pleasure.